And it's just, I think, showing investors the light at the end of the tunnel that this is the potential start of a mine someday. And right now, with the market ripping the way it is, look at American Eagle. We went from 2 cents to $1 and not a great market. We're fighting for time, which is the most valuable commodity.
Drilling westerly across the property now is our best bet to properly, as best we can, as efficiently as we can, expand the zones of grade continuity and connect some of the stuff we have at surface to depth.
Hello, everyone, and thank you for joining us today for this live American Eagle Gold Market Update. Today, we're joined by Anthony Moreau and Neil Prouse to hear their commentary on today's press release highlighting NAK25-78, which intersected 802 meters of 0.71% copper equivalent from surface, including 375 meters of 1.01% copper equivalent, beginning 211 meters downhole. If you have questions for them, please submit them using the chat box, which can be found in the bottom right corner of your screen. Also, please note this event is being recorded and will be made available shortly after we conclude. Gentlemen, congratulations on the hit. Anthony, you rushed these results to market and called this a banger in your interview with Neil in the press release. Now that you've had time to digest NAK25-78, what makes this hole particularly significant in the NAK story? What should investors take away from these results?
Yeah, thanks a lot, Kyle, and for everyone attending. What's particularly interesting about this hole is just it's the grade, it's the continuity from top to bottom. There's no significant high grade section that's smearing everything. It's very consistent, around 1% for a huge interval, which is very important. And it followed up, the hole that we had in 17. I think a lot of investors are is that for real? And this thing drilled south-southeast. And it shows how wide this section is. And we are starting to really understand the geometry. And it's just, I think, showing investors the light at the end of the tunnel that this is the potential start of a mine someday. So that's why it's significant. And it shows this area, this zone, it continues top to bottom. So when we hit 48, for example, there was high grade at depth. And what we want to show people here is that this thing all holds together in a singular forward-looking statements ore body. From a company perspective, why it's really important is that we believe the tonnage that we have around this south zone is significant. It turns this mine from a potential 500 million ton deposit forward-looking statements to something that's multi-billion tons. And right now, with the market ripping the way it is, look at American Eagle. We went from 2 cents to $1 and not a great market. And there's a lot of other things moving that we think are inferior to us, but people are kind of pigeonholed in their own plays. And I think what this does, this high grade, it brings a lot of attention to American Eagle Gold. And we're not just fighting for eyeballs, we're fighting for time, which is the most valuable commodity. And this grade, this hole that we hit, allows people to spend, instead of 5 seconds on American Eagle Gold, half an hour. And they come for the grade and they stay for everything else that's all around there. So lots of people look at all of our previous holes. And I think that's why you're seeing the buying on the market right now. I think people are seeing this as a potential to be a quote unquote tier 1 deposit someday. We have a lot of work, but NAK is for real. And to bring a lot of attention away from some of these fly by night stories to NAK, that I think is here to stay. So as a long answer, that's why 78 really is important.
No, great. Neil, I want to bring you into the conversation. 78 gave you 802 meters from surface with remarkable continuity. Can you walk us through what the geology is telling you? What are the key controls of this mineralization? And how confident are you that this represents a coherent, predictable system rather than some isolated high-grade pods?
Yeah, that's a really good question. Hole 78 was planned in conjunction with our much more advanced knowledge of the geology based on the 2024 and integrating the 2025 drilling into our modeling, as well as integrating the recently acquired structural data that we've been collecting throughout the 2025 season. So what we know from that is that in the South Zone, there is a significant population of veining associated with higher grade intervals that is dipping fairly steeply to the northwest. And so 78 was collared within our known zone of favorable lithology, those coarser sandstones and conglomerates, which people following the story know is a really favorable host for the disseminated vein-hosted mineralization we see down deep in the South Zone, and then oriented shallowly to the southeast. And what this does is it gives us our best chance at intersecting this now better understood vein set at a more perpendicular orientation, certainly a more perpendicular orientation than 17 and 31 we're drilling. And as you know, validating our work, it resulted in the best hole to date at NAK. So we hit the veins at a much better orientation core axis. It shows that the system, you know, is not drilling down a few vein sets. This is drilling across a much larger vein set. And what it does is it links very strong mineralization in between our more discrete drill fences, our 17 or 31 drill fence to the north and our 41, 46 drill fence down to the south. And it shows, remarkable continuity of mineralization between this. And knowing this, you know, I think there's room to expand this high grade as well. It's definitely a more isolated high grade area within the South Zone, but we've shown that this is a big zone, right? This is many hundreds of meters by hundreds of meters, and it's open to expansion. So yeah, I think the high grade here, just showing that continuity and basing it on good, solid geological data, you know, it's been really rewarding for the team. And it's good to see the market reacting as well. It's been a great hole.
Now, you mentioned that drilling southeast gave you optimal intersections through northeast, southwest trending veins. How predictable is this vein orientation across the broader South Zone? Does this structural understanding give you a search image for targeting similar zones in areas like Zone 59 or the northern extensions?
Yeah, I mean, the structural orientation, the orientation of the vein sets is actually remarkably consistent across the property, irrespective of lithology. So there's a very significant population that dips to the northwest and striking similar, and there's a significant population that dips to the southeast. There's also a geologic control, a lithologic control to the best host outside the porphyry stock. And so at NAK, we're in a bit of a battle between what's the most favorable orientation for drilling across stratigraphy versus what's the most favorable orientation for drilling across veining. And they're almost directly opposite. So your best favorable vein orientation is often drilling down strike of the bedding, and depending on how steep you orient that hole, down strike and down dip, which is not ideal. So what we've shown is if we know we're in the favorable geological horizon, drilling the veining at this orientation is great. But we do have a really good compromise at drilling a more westerly orientation, actually. And we've shown that this has been very productive. Hole 60, which was released earlier this season, hole 56, which was released earlier this season, hole 53, these were all westerly oriented holes. Good favorable orientation to veining, but also a pretty favorable orientation to drilling, not necessarily down stratigraphy, but across stratigraphy. So we can apply the southwestern orientation to further expand the South Zone strategically, but you know, drilling westerly across the property now is our best bet to properly, as best we can, as efficiently as we can, expand the zones of grade continuity and connect some of the stuff we have at surface to depth.
I want to take an opportunity to remind people to submit questions in the chat. I see one here. It's similar to the question I had. I'm going to pass it over to you, Anthony, but are you able to share more information about hole 80 referenced in the news release? I'll just add on with that, given what you learned from 78, what's your confidence level on 80? When can investors expect those results, and what do you anticipate they tell you about the South Zone? Sorry, Anthony, you're on mute.
Yeah, sorry about that. So 78 was a risky hole because, you know, we didn't know, like, if you miss on that, you hurt the whole company. And the fact that it hit that continuous stuff across the veins for us really made this south zone for real, the high grade. And like Neil said, it has the opportunity to extend. And we thought we're going to drill 78, we're going to drill 80 at the same time. So 80 was drilled around 450 to 500 meters to the east, going south-southwest. And if there's a zone there, it was going to kind of prove it out. So you got one kind of going north to southeast and north to southwest. So we kind of took a risk with both of them. Visually, they look really good, but I've been surprised before, good and bad for the visuals. So we're feeling very confident about that hole coming through. But again, we got to wait till the assays are out to really know for sure. In terms of timing, and if 80 hits, like south zones, that's really kind of, it puts a real bow on that zone.
Mm-hmm.
Again, using that information combined with 78 can really help us further expand it to where this thing goes in terms of the geometry and the geology. But in terms of timing, I've been burned before guessing, so I would say 80 is going to be back at some point before PDAC. I think that's a safe thing to say.
Okay, so you've positioned the south zone for an initial resource assessment. What are the critical milestones between now and delivering that maiden resource given this? And how many additional meters of drilling do you need to reach an appropriate confidence level?
So I'll take that. I'll let Neil kind of follow up. So the big milestones to get the resource is just more drilling. So we got to figure out how big our drilling program is going to be next year. It's probably going to be very similar size to what it was this year, around 30,000 meters. And how many of those meters are we going to allocate towards, not just defining the resource that we think we have there, but expanding the current one, the current one we have back of the envelope in the south zone. So it's just resource delineation, drilling. I would say back of the envelope, you're probably looking at about half to 2/3 of your drilling probably towards figuring out that south zone, and not just where this is, also expanding it further east towards hole 2309 was drilled. But it's just drilling. And the reason why we want to do a mineral resource, this property is amazing. And every time we think we've found the bounds of the system, which would make it easier to do a resource because it'd be bookended, it's like whack-a-mole in a very positive way. We're just coming up with new surprises. And we never really want to tell the market how small this resource could be. But I think where the market is right now, they want to kind of get an idea of at least an idea of what it can be. So we think it's big enough right now where if we came out with a resource, it would be big enough for any miner to come in and mine it economically. But at the same time, we want to allocate resources to drill where we could turn this thing from a 20-year mine to something that lasts multi-generations, 60 to 80 years. And where that comes in is the stuff that's in the porphyry stock, in the north zone where 35 and 38 are. So we're not necessarily going to drill those areas to come up with a resource, but enough that people can back of the envelope, including our partners, Tech and South 32, figure out, can this string together? And we think with the 30,000 meters, we get close to that. We're going to put out the resource at some point in Q2, hopefully 2027. And Neil, you fill in where I dropped there, what kind of drilling we have to do to come up with that resource.
No, that's a good succinct summary of the plan. I think, we need to get all the assays back. We need to model everything up and then design a program to ensure that when we do put a resource out, it's the strongest possible given the data. I think an off season of work to properly interpret will give us our best chance at both infilling and expanding the known zones. And like I said, with that westerly oriented drilling, stepping that south zone further to the north as well. So it does properly link up with the actually pretty stellar mineralization we have in the north too. So we know there is a good connection between them, marginal the porphyry stock. We've had some good indication this season that the undrilled stock further to the east actually hosts some pretty decent grade shallowly. So you bring that from surface to depth with shorter holes at a shallow inclination, collared to the east, stepping north from the south zone, and just linking everything and coming out with one, good big sized resource model. So that's the goal. And it'll be, that'll take all of our meters for 2026.
Thanks for the logical answers, gentlemen. But give us the big picture. How many meters are you planning for 2026 exactly? And what's the budget? What are the 2 to 3 most important questions you need to answer?
So what cost of capital, right? So we're doing all skid rig next year. We're going to be building a partnership. We extended our OLTC, so it's a license to cut down trees, and we're going to partner with a logger, and they're going to do some strip logging, so allow us to access any collar that we want on the property. And why that's important as opposed to heli drilling. When you're doing heli drilling, you're kind of handcuffed by the pads you build way ahead of time. And when you're drilling, you're kind of making plans on the fly. And sometimes what you think you want to drill in August is different in October. And once you have a helipad built, you can only kind of change the azimuth of your hole about 15 degrees. So by doing the skid access, we can make sure 100% of our holes are going into the best location based on our previous drill holes that we drilled in that season. So that's really important. But I think right now we're looking at about 30,000 meters. But if our stock starts going where I think it can go, and our target's $3-4, because we have skid access and it's a better budget, and now that we have the partnership with the logging company, there's a real reason to think that into 2027 we can continue drilling. Because if we think we have the tiger by the tail and we want to build out this resource, there's no reason to stop. The reason why we stopped this year, a lot of our drilling was in areas that we did not know. And it took us 4 years to find the super high grade, quote unquote, jewel box in the south. So we want to step back and make sure our cost capital, the places that we put the meters in the ground, are the most ideal. And it's just going to take a couple of months of modeling. And when you look at some of our historical information, the stuff that we hit in 78, it brings a lot of the hits that we hit in 2023 and 24 into play. And I'll highlight hole 2216. It hit multiple meters of around over 1%. So while we thought that was isolated previously, it actually might combine and connect with some of the zones that we recently hit with 78. So this modeling is not just going to put together the holes we put this year, but it's combine it with all of our previous 3 years before that. So back the envelope 30,000 meters, but we could do 50, 60,000 meters, but we're going to see how it goes. And one thing I do know for sure, we'll be drilling at the very latest June 1st and not stopping until the end of December.
So 802 meters at 0.71% copper equivalent from surface. Spectacular width, but how much is below 1% copper equivalent? Walk us through your thinking on cutoff grades and economics. At what copper equivalent threshold does this become economically compelling? And how does the South Zone potentially pay off capital to unlock the broader system?
I mean,
Well,
I can go ahead there, John. I mean, it all depends on access, right? Every mine's economics are different. Obviously, it's too early to say what would be an economic cutoff here. We're well in advance of a PEA or an economic assessment. A sizable portion of the hole, though, was above 1%. So that 375 meter stretch was very consistent. In terms of raw intervals, there were about as many above 1% equivalent as below 1% equivalent. And yeah, like unlike some of the other holes where there is some really, really punctuated high grade, I think our raw highest percent through that zone was about 3% copper equivalent. So it was consistent, which is, that's really good from a mining perspective. In terms of starter location, what this hole doesn't highlight is the really high grade gold zone that we have near surface, where hole 80 collared about 400 meters to the east of the hole 78 collar. That is a very compelling target for an initial startup, and that's going to impact the economics as well. So what Tony will tell you, what NAK has going for it, you can drive right up onto the property. This is not in the mountains. You're not having to clear 30, 40 feet of snow in the winters. This isn't a coastal climate. It's interior BC. It's a lot easier to get infrastructure to the property to support that, right? And that affects the economics as well. So there's a lot more factors than just grade alone here. But even still, like these grades hold together quite well. There's a pretty good even mix between copper and gold in that overall equivalent calculation. So it's hedged on fluctuations in both metal prices too. So it's early stage, right? It's too early to say conclusively, but it's looking pretty positive.
Anthony, any further comments?
No, look, we just want people to, remember American Eagle Gold was there. We want to fight for people's time and their money, and we just say do your research. And I think what people did today is it made them pay attention. 78 made people pay attention to American Eagle, and I think it got them to the story. But I think what makes people stay to the story is everything else all around it: the tonnage, the infrastructure, etc. I think we were undervalued for a long time. I still think we are, but it was a good time for good long-term shareholders to buy into the property, and those are sticky shareholders, which I think is really good. But unlike a lot of other BC companies, we got a lot more catalysts to come, a lot more news releases to come out. So we'll be having news all the way until PDAC. And I had a hat that I was going to give at PDAC. I see there's a question, where can we get the hat? So you come see me at PDAC, they'll give you a hat. So we're going to make a hat called "Let's Make American Eagle Gold Great Again." But with what's going on with Trump right now, and given that American Eagle Gold had that big jump, I don't think we'll do those hats. But we're just going to make American Eagle Gold better and better. And I think some of these holes are going to come out in the coming weeks are going to bring more eyes to the story. But I just say do your research. The ticker is AE on the TSX Venture, and we're here to stay.
There's one more question. Neil mentioned different factors for economics. One was submitted pre-registration here. You're assuming 80% recoveries as a placeholder across all metals. Given the bornite, chalcopyrite, molybdenum, and clay alteration zones you're seeing, when do you start metallurgical test work? What are the key recovery and processing risks investors should monitor?
Yeah, so we're going to be doing some targeted metallurgy holes, like exclusive metallurgy holes this year, where we drill wide diameter core through the different mineralization styles. So it's a tough one to say because we do have a variety of mineralization styles throughout the broader zone. Obviously, the recovery and the economics on the really bornite rich stuff is going to be better than the stuff we get on the fringes of the system, where there's some more pyrite involved. There was some preliminary metallurgy done. I believe that is in the 2018 assessment report that was done by previous operators on the property, but it was just through the south zone, and it was just through the high grade part. And so, I don't think we can, in good faith, take that as representative of the system as a whole. So in 2026, in conjunction with working towards a resource, we'll have some metallurgy holes drilled that are targeted specifically to address the variety in mineralization styles.
Gentlemen, thank you so much for taking the time out of your day to update the market. Congratulations on the successful hit. Everyone, thank you for joining us. If you came in a little late, this is being recorded and will be made available shortly after we conclude here. Any closing remarks, gentlemen, before we sign off here?
I think we covered it. If you got any questions, follow up with Kyle at 6, and happy to set up a meeting. Happy to talk to any investors or potential investors. And yeah, we love NAK. Go NAK, go EEE. And thanks a lot, Neil, and your team.
Yeah, thanks, Tony. Yeah, thanks, Kyle.